day, traders, and welcome to another short-term trading tutorial. This is Roger Scott, and before I begin, I'd like to remind you to visit MarketGeeks.com and download your free swing trading report today. I'd like to discuss some basic stock market tools that will help you improve your market timing skills. In today's day and age, with so much information available, traders have unlimited choices in selecting the tools needed for accurate market analysis. Many traders fall into a trap by believing that complex tools will improve their analysis and timing skills. I want to present a few simple tools that I used during last few weeks to help me analyze the US stock market. My goal is to demonstrate how simple analysis tools can help you analyze the US stock market just as well as any professional trader can. The first thing I would do is begin my analysis with simple basic visual analysis techniques. I would look at the trend to determine the general direction of the stock market first. Then I would examine how the market reacts to pullbacks. In this particular case, you can see that the trend is very strong and the pullbacks only last a few days. This would demonstrate to me that this market is very directional and is extremely bullish overall. You can see in this graph how quick each retracement bounces back in line with the trend. Notice I haven't used any advanced tools or technical indicators yet. After I complete my visual analysis, I get a fairly good picture of what the trend is doing, and I determine how strong the trend really is by measuring the pullbacks and how fast they move back in line with the main trend. The next step is to see if any chart patterns apply to the market that I'm analyzing, and it will help me determine if the market is currently in a range-bound cycle or a trending cycle, and it will give me further clues as to the future direction the market may be moving towards. In this particular case, you can see how the stock market has been in a symmetrical triangle pattern for over the last several trading days. This tells me that the stock market is currently consolidating, because triangles are consolidation patterns that occur typically after strong trends. Further, because the pattern is a continuation pattern, it also gives me clues as to the future direction of the stock market. Since the trend prior to the consolidation period was strongly moving up, the market should continue moving upwards after the consolidation period ends. By now, we know the stock market was in a strong trend recently, and we know the stock market is now in a consolidation stage, which is a temporary period of pause while the market generates strength to move forward. Since symmetrical triangles are continuation patterns, and the trend prior to the triangle was moving upwards, we have a good idea of where the stock market is going to go after the triangle pattern completes. The next step is to apply basic indicators to determine technically if the indicators confirm our visual analysis. I will apply the RSI, which is a great stock market tool to determine overbought and oversold conditions, as well as divergence analysis. You can see in this example how the RSI began bearish divergence over 2 weeks ago. You should know that the RSI is not a sensitive indicator and does not provide these signals very frequently. So when I see these divergence signals, I make sure to pay very close attention. There are many simple stock market tools that can help you analyze the market like a pro. Start with visual analysis and work down to technical patterns and basic indicators. Always determine if the market is in a congestion range-bound cycle or a trend cycle, and then see how overbought and oversold the market really is. Apply divergence analysis at critical turning points and monitor the fundamentals. That's it for today's tutorial. Don't forget to visit MarketGeeks.com for your free swing trading report. This is Roger Scott wishing you the best in your trading.